Hi, everyone. Hi, Greg. It's nice to meet you and nice to have you at Wrap Up Podcast. And could you please introduce yourself to my audience and also tell us a bit what you guys are building?
Sure. I'm Greg Kidd. I'm the founder of US Bankcoin, which is running on the same technology as stablecoins like USDC and Tether, but it's issued directly from US banks. So it's US bank money that operates 24 hours a day, 7 days a week, pays interest, but importantly has FDIC insurance. And the goal is to make it available to everyone in the world. So everyone in the world can have access to US bank dollars. It works
Okay.
both with the bank rails as well as with the crypto rails. So it's a bit of both.
Right. Uh, and if you tell me, please, why did you decide to go after this product but not to build a stablecoin product? So, if I'm not mistaken, you guys are building basically tokenized deposits, right? It's not a stablecoin; it's a tokenized deposit. So, why did you decide to build tokenized deposits instead of stablecoins?
So the difference is a stable coin you can hold without identity. All you need is a private key. So it doesn't have any of the compliance or consumer protection safeguards. So this is a form
Okay.
of safe money. It also has accountability. So all the protections of the banking system, which means chargeback, if you've been fraudulently had your money taken, all the compliance controls for money laundering, terrorist financing. So this is real bank money, complete with FDIC insurance. So you can use it the same way as Tether or USDC, but if you want the safeguards, if you want to earn interest, it has those capabilities. It also interacts directly with the banking rails. So ACH, wire transfers, you'll actually have a bank account. So this is a
Okay.
chance for everyone in the world to have an actual, real, full bank account, but that runs on the same rails as stablecoins.
So if I understand it correctly, basically it is more safe than stablecoins, right? That's why you decided to build tokenized deposits instead of going after stablecoins. So what problems are you guys solving with your solution then?
Well, there's some people out there that might have had a thing or two of a problem with stable coins or crypto, with either getting
Okay.
hacked or being involved in compliance issues. So it really
Okay.
is for folks that are interested in safety and also in compliance. And so it can be built into wallets. And so there are
Mm-hmm.
people that are fine with the stable coins. Stable coins have been really good for TradeFi, but this will
Yep.
also allow us to have a debit card attached to it. So you can spend it anywhere that Visa, MasterCard, and other major cards are accepted.
Okay.
And it also means you can receive it directly, like for payroll or use it for bill pay. You don't have to burn into it or, burn out of it or mint into
Mm-hmm.
it. It's just bank money, but it works like a stable coin, but it also
Okay.
connects to the banking system. So it's simpler and it's safer. And we are looking to make it available all around the world. So it's what we call fair access. So unless, you're actually on the OFAC sanction list or, are actually in a criminal proceeding, we're looking to
Okay.
make it fully available.
How can you make it for the person on the sanctions list? You can make available.
Well,
Yeah, tell me.
except on the sanctions list. But even on the
All
sanctions,
right. Sorry.
everybody
Yeah.
except on the sanctions list. But if you're not, as long as
Okay.
it's not criminal, unlicensed,
All right. All right.
abusive, deceptive, unfair, we're going to bank you. And so um,
Okay, fantastic.
we own the bank, right? So you can say,
Right.
well, you're going to find a bank to do this. We went ahead and bought a bank. It's OCC, nationally chartered, Fed holding
Mhm.
company. So it's the
Okay.
real deal. It's Vast Bank in Tulsa, Oklahoma. But it's just like you walk
Okay.
into Tulsa, Oklahoma. It doesn't matter if you're in Malaysia or Argentina, we're going to bank you.
Okay, that's interesting. Greg, how would you bank someone who is not the US citizen or US resident? Because let's say I'm based in the UK, right? How can I get access to your product? What should I do? What are the steps?
So it's just online. You can either download an app or we'll have a widget. So you can find it even like anywhere on the web that supports USB-C. You'll simply do a
Okay.
very simple KYC, the usual things, a biometric, email, phone number, a PIN number, um, and then state your name, date of birth, where you live. That's enough for a low
Okay.
limit. You have a government ID, higher limit. And if you already have a bank account, higher limit still. But as long as you
Mhm.
pass this test and you're not on the sanctions list, you're going to be able to hold USB-C, earn interest, and have all the safeguards. as if you walked right into the branch in Tulsa, Oklahoma.
So regardless of where I'm based at,
It's
that's
not,
that's really that's a-
we don't discriminate based on geography. We don't see any reason why we should discriminate based on geography.
no, that opens a lot of opportunities because let's say I want to, let's say, do a business in the US, then I can quickly create an account and start using it. That's really nice thing. Can I say this is basically the alternative to the US central bank digital currency? If it is not a stable coin, then
Well,
does it mean
if you, if you watch the movie The Matrix, there's the blue pill and the red.
okay?
Okay, the blue
Yeah,
pill is like central bank digital currency. That's like George Orwell, Big Brother. That's like the Matrix. And the red pill, well, that's like Mad Max. But this is in between. You can think of this as like the Star Trek pill. Like in the future in Star Trek,
okay.
everybody has access to money. Klingons, Romulans, everybody has access to money. This is that form of money. It's not Mad Max and it's not Big Brother. It's just right down the middle. It is self sovereign, so it works like crypto, but it has the guardrails of the banking system.
Who are your competitors at the moment? Is it
So, yeah, go ahead.
stablecoin providers or another company that's providing the same product? Because I read the news that JP Morgan Chase, they also launched a similar product in the market.
JP Morgan Chase also has tokenized deposit, but you might have noticed
Yeah.
they're not so interested in servicing people like everyday people
Yeah.
around the world. It's
Well,
just
why
kind
do you
of
think so?
for the big boys. Well, it's kind of Jamie. He's you might say he's more of a country club type. I'm more of a bike messenger type. So our
Okay.
risk appetite and our desire for inclusion is very different from JP Morgan's. Hey, I just I do a lot of banking with JP Morgan. They just turned me down for a mortgage. They said I didn't have enough of an income record because I make too much income from staking and I don't have a regular 9 to 5 job. So
Right.
even I have a hard time getting a mortgage at JP Morgan.
Wow.
But really our goal is that everybody should be in the system. And so in terms of competitors, one other
Mm,
company, and we're an investor in it, is Custodia. They're also doing
okay.
tokenized deposits. They're the first bank to get a crypto banking license in the U.S. But the difference is they don't have access to the Fed. We have a Fed master account, which means we clear and
Mm-hmm.
settle directly at the Federal Reserve. They don't have that privilege. And so right now,
Okay.
I think we're in the lead. We're also doing this as a consortium so other banks can join. It's not about our bank. Any banks can join the consortium. Think of it like Visa, but it's like a
Okay.
Visa for people being able to have deposit accounts all around the world. I'm just back from Argentina and Brazil.
Right.
In those
Right.
places, they use a lot of dollars, but they're
Mm-hmm.
sketchy dollars. These are the real
Mm.
dollars.
Now, what I tell you, Greg, you should definitely visit Central Asia because
Sure.
we would also love to have access to this type of products because I am from Uzbekistan originally. It's a Central Asian country. And sometimes, not always, but sometimes our local currency fluctuates really strongly. So it would be great to have access to something more stable. So I highly recommend you to visit this market, explore it, and see how you can launch here.
I'm just back from a month, 2 weeks in India, 2 weeks in China. So I've seen the India
All right.
stack works with Aadhaar. I've seen how it works with like WeChat in China. So it has sort of the characteristics of the way payments work, like with QR
Okay.
codes, et cetera, and whatnot in India and China. The difference is those are systems that work just within India and just within China.
Mm.
This is really
Mm-hmm.
meant to be universal, no geographical boundaries, no company
Yeah.
boundaries. So we also
Yeah.
compete with just traditional wallets like Revolut, et cetera, whatnot. They have money. Try sending a dollar or a euro from Revolut to Venmo. You can't do it. Or WeChat. Those
Yeah.
monies, those fiat monies, they're all trapped in the wallet. This, like USDC and Tether, works across wallets,
Mm-hmm.
right? But
Mm-hmm.
it is bank money. It's not, it runs on crypto rails, but it's
Yeah.
fiat bank money.
Yeah. No, that sounds really good. What has been the reaction of the regulators so far? How did they react?
Well, it was very tough to get the bank when the Biden administration was in. And look, I ran
Okay.
for Congress and I ran as an independent before. I was
Wow.
registered as a Republican. I'm actually running as a Democrat this time. But I can tell you there's been a wind change. When the Trump administration came in, they put out an
Okay.
executive order for open banking, fair
Mm.
access, and objective rather than subjective standards for risk. So you can't just
Okay.
knock somebody because they have their country or their people have a bad reputation. It's got to be
Yeah.
objective. We agree with all those principles. So there's a whole new set of regulators at the OCC, the Fed, the FDIC, and so it's a game changer. And so now we have regulatory tailwinds rather than head.
Mm,
So they're actually encouraging us to like
yep.
explore. We put a lot of capital up, so
Mm-hmm.
not saying everything's going to go perfect. There's never going to be bad actors, but we're well
Absolutely.
capitalized, and there is a desire in the United States to make the US dollar usable all around the world. It's kind of like
Yeah.
Libra, if you remember
Yep.
Libra and Facebook, but no creepy Mark Zuckerberg, right? Libra 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 died not because it was a bad idea, but because everybody was like creeped out by Mark knowing all this shit. And so this is
That
a
time, I think. Yeah, I think people were freaked out about Libra at that time. Maybe it was just
time.
a bit ahead of its
Yeah,
time.
that's right.
Now, I think if they launched Libra, perhaps it could work. Perhaps it could work because, as you said, regulatory environment also changed. There is new administration, which is more favorable towards crypto and etc. And do you think regulators are more favorable towards stable coins or tokenized deposits? Which one they prefer?
Well, stablecoins are the one they're more familiar with right now because
Yes.
it passed with the Genius Act. The Clarity Act is
Yeah.
following up. And, they did pass it. It doesn't really have a lot of compliance rails. And look, I'm not complaining about stablecoins. I'm first money in at Coinbase. So I'm all up on stablecoins. It's just that there's two markets out there, and some of the big folks that are looking at this industry, like Citibank had a report out and
Mm,
thinks that 2030 tokenized deposits will be bigger than stablecoins. Because again, same technology, fewer risks, fewer middlemen. And so
mm,
it's just in many ways, our view is it has all the advantages of a stablecoin, except you do need identity to use it. And look, there's some people that they don't care about the identity piece. They're just doing trade fi. But if you're going to do, like if Walmart has $3 billion of payments coming in and somebody asks, who'd those come from? And they're like, I don't know. Like, could be a problem with their regulator or regulators in general when something goes wrong. And things will go wrong. And, one solution has identity, the other has like a paper bag on their head. And so, you know, that's flavor of the month right now. And like I said, we'll do cross liquidity with all the stable coins
mm-hmm,
one to one.
mm-hmm.
So, we're
Okay.
perfectly happy to work side by side with stable coins. But for folks that really want things simpler and want the safeguards, the guardrails of bank money, this is it.
Yeah. You just mentioned regulators are very familiar with stable coins, but not that much with tokenized deposits. Why is this the case? Why? And I also see a lot of information about stable coins, how they work, and etc. But I don't have that much information online about tokenized deposits. People don't know about it that much. Why is this the case?
Well, before banks just didn't have the appetite and they also were discouraged from using blockchain. And so
Okay.
it doesn't really make sense for a bank to issue a stablecoin. Why? Stablecoins have to
Mm-hmm.
be one to one. Like if you have money that's come in for a
Yeah.
stablecoin, it's very limited what you could do with it. You can put it in a bank account, you can put it in T
Mm-hmm.
bills, but not much else. But banks have an
Okay.
advantage. For each dollar a bank holds, they're part of what's called the fractional banking system. They have to hold one on
Yeah.
hand and they can put the other eight to work in loans,
Right.
etc. So banks earn a
Yeah.
spread. Stable coins can't do that. Tether pays 0% interest. They earn money on deposits and T bills, which is pretty good. It's like one of the best financial
Mm-hmm.
models. But banks have an
Mm-hmm.
additional advantage. They can actually lend the money out and earn a higher yield. And so
Okay.
up till now, they haven't been in the deposit token business because they weren't allowed to use blockchain. It was actually discouraged as seen as too risky. That has been a sea change since November
Mm-hmm.
6th presidential election. So now it's only the first time that banks have really been allowed to look at building fiat money on blockchain. JP Morgan got a jump start. It's kind of funny. Jamie's like always talking down Bitcoin and crypto and stuff, but you might have looked,
Mm.
there's talk and
It
there's
may it has changed.
they implemented a chain and but they did it in a
Yeah,
very, very limited way for like supply chain
yeah.
management, big customers. But really it was beyond the pale of anybody doing in the United States. I was lucky that I bought the bank during the Biden administration. Very hard to buy a
Mm,
bank if you had anything to do with crypto. And I have to admit, I was a chief risk officer for Ripple. I did put first money in at Coinbase, but I also worked for the
okay.
Federal Reserve, right? So I was at the board. So I could put a suit on and clean up. I could kind of hang with the crypto guys, but I'm something in
Mm,
between. So we were just lucky enough to get our bank and get it cleaned up during the waning days of the Biden administration. So we just have a little bit of a jump. I'm sure we'll have company, but we're inviting people to join. It's kind of a Visa-like organization. It doesn't really
Okay.
make sense for everybody to do their own stable coin, everybody to do their
Mm,
own deposit token. That's like the 19th century in the
exactly.
US, where each bank had its own
Exactly.
currency. And that was the disaster that led to the creation of the Federal Reserve. So we're lucky. We've got a little bit of a head start, but folks are going to wake up. They're going to catch up. Um, and the
I
regulators
agree.
will come up to speed. They will come up to speed.
Yeah. Yeah, definitely. I agree with what you said. Not everyone needs to launch their own stablecoin, but so far what I'm seeing is that everyone's trying to launch their own stablecoin, and we should expect that most of them will die out.
They
Definitely, most of them will die, not survive. So, and it's gonna lead to maybe again to creation of some kind of centralized regulator, or I don't know. Let's see how that goes.
We'll see how it goes.
And
But I mean, Tether and USDC are
yeah.
pretty hard to displace. It's
Yeah, they are, yes, but again, when you have such players, I don't think it makes sense for every second company to launch unless you have like a network effect, unless you are really, really big company which you can then disperse among your customers. But everyone seems to be launching their own stablecoin. I don't know
let's just say
if
I'm not
people going.
investing. We have an investment fund. We're not investing in the number 3, number 4, number 18 stable coins. So
Right.
we don't get that, and we think there'll be consolidation back to just a couple. But there could be specialty coins for internal
Mm,
purposes. It's,
yeah.
we
Yeah.
we don't think that's where the action is.
Sure. Greg, we know that one of the biggest risks with stablecoin is the bagging when you don't show your reserves and etc. Can we say tokenized deposits are more safe than stable coins because banks are regulated, you have to show you all your reserves and etc. Can we say that?
Well, we're not only regulated, but we're backed by FDIC insurance. So if we
Yeah.
screw up, the
Okay.
FDIC is there to bail those deposits out. Even if there's a run on the bank, everybody just
Okay.
wants their money out. And so there's a
Mm-hmm.
solvency issue, which means like we're bankrupt. We blew it, right?
Okay.
FDIC steps in. Liquidity is
Yep.
when everybody comes and takes their money out, and maybe you even have the money, but it's all tied up. Well, we're a
Mm-hmm.
member Fed, so we have access to what's called the discount window. So if there's a run on our bank or the banks, the Fed will step in. They're not going to run out of ink for the printing machine. So we have both
Mm-hmm.
liquidity and solvency protections that stable coins don't have. So the only thing that will depeg us is if the Federal Reserve in the United States depeg, which is a risk, but
Yeah.
that's a
That could
risk
also
worthy.
happen. Exactly.
It could happen.
Exactly.
But we
Yeah.
also are buying, we also are in final stages for buying a bank in Europe. So we'll do the same for the euro, and we've already invested in the
All
banking
right.
system. But
That's nice.
we think the dollar's the best game in town, but we covered our bets with the pound and the euro. So
No, I saw the numbers very recently. Again, it's not for the tokenized deposits, but stable coins and dollar-backed stable coins, like basically everything in the market. That basically the second is euro-backed, but the it's tiny
way
bit.
behind,
It's
way behind.
yeah, 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 way
Way behind.
behind. Yeah.
We're, we're,
Can you
we're,
tell me
we're,
about your?
we're doing the euro as a courtesy.
Okay, makes sense. Can you tell me about your business model? How do you make money?
Well, it's pretty old fashioned. I mean, we earn money
Okay.
on spread just like Tether does. So there's
Yeah.
usually the cost of deposits, if it's costs us 3% for interest paid on the deposits, we're probably lending at 7. So there's 400 basis points of spread. The bank gets
Mm-hmm.
some, we USBC, the scheme gets some, but whatever developer we're working with, could be MetaMask, it could be the Brave browser, it could be Uphold, they'll get
Mm-hmm.
some as well. The second is
Okay.
interchange. We do issue cards. Like if you look at my in my phone here, there's actually a good old see
Yeah,
USBC
Visa
card,
card.
right? So we
Yeah.
get interchange on that. And again, we share that between the bank, USBC, the scheme, and whichever developer is doing this. It's very developer friendly. And the third, if there's
Okay.
FX, people are switching in and out, there's FX charges, we'll share that as well too. So this is a B2B to C play. You can download USBC and get the app, but in general, what
Mm,
we're looking is for USBC to appear in other wallets, in games, in marketplaces, etc. And wherever people use it from, we will share
okay.
revenue back with that developer. That's the model. So it's spread, interchange, FX fees, just all old fashioned banking, and we share
Mm-hmm.
that. the participating banks, we keep a little for ourselves, like about a quarter of that, and then we share another quarter generally with the developer who's bringing a population of users. And that's the easiest way for us to grow. Like, you put it into a browser, or you put it into a game, or you put it into a
Okay.
marketplace, or you put it into an existing wallet. And so people will hold this right alongside stable coins, crypto, traditional bank money that isn't like tokenized. Like, it could even be in a bank wallet. It could be in a Wells Fargo wallet. But I can tell you, Wells and JP Morgan,
Okay.
they're a little slow to the dance, right? Like, I'm not expecting
Yeah.
them to put it in. And you got to wonder whether like a PayPal or a Revolut are going to put it in. Those guys are conflicted. They're kind of like AOL or CompuServe back in the 1990s. They're trying to keep people in their walled gardens. We're interoperable. Wherever the person goes with their identity, their money goes.
Mm,
We're trying to trap it in a silo, either
okay.
a country silo or a company silo.
I was
Totally.
about to ask. Yeah, I was about to ask about this difference, especially with PayPal, because they also launched their own stable coin.
They did. They're
So,
just trying to solve the problem of getting from Venmo to PayPal, right? They don't have a way to do it.
mm,
Each of their monies are
mm,
trapped. So, they're kind of late to the party, but better late than never. But at the end of the day,
absolutely.
how many stable coins are people going to want to deal with? And so we made the big push. We got the trademark US bank coin. HSBC gave
Yeah,
us a little bit of heat. We said, I think we can tell people can tell the difference between HS for Hong Kong, Shanghai, and US
yeah,
for the United States. They
yeah.
finally just backed off and let us have the trademark.
No, I like that trademark USB-C. Sounds really good. And Greg, my last question is, where do you see USB-C in the next 5 years from here?
Well, by gosh, we better get some traction against those Tether USDC big boys, or
Yeah.
basically I've wasted the last 5 years of my life. So we
Okay.
better get some market share. We're definitely in the right space. If we don't execute,
Mm,
the out executes us. Well, kudos to them. But
right.
at the end of the day, we think all real world assets are going to be tokenized. And if you're going to
Hmm.
be going from a tokenized Pokemon card to a tokenized Ferrari, you're not going to go direct. You're going to go through something, and we think it's going to be tokenized dollars. And the
Okay.
question is, if those assets have identity, you really think it's
Right.
going to pass through a form of money that has no identity? That's called money
Hmm.
laundering 101. And so we
Yeah.
believe we have a great, great role to be the lubricant between all real
Okay.
world assets. It's
No,
a
Greg.
that's it.
Yeah, it was pleasure speaking to you, and thank you for explaining this concept of the tokenized deposits and what you guys building with USB-C. I really appreciate this conversation and would love to stay in touch. And thank you everyone for listening to this podcast.
Thanks for having me, and come to San Fran sometime too. We'll host you here. The
Definitely,
weather in London,
definitely,
not so good. Come on out to California.
sure.